What's up, guys? It's Velo. I'm the community manager of Leverj, as hopefully you all well know. I'm here with Bharath, the CEO and founder of Leverj, and we're here to talk. So what's up?
Well, the market is not up. Everything else is
true.
Yeah,
that's not up.
But I think that we have a good future in front of us. Crypto space is exploding. Many good teams are trying out many interesting ideas.
Right.
Many successful projects, good traction. Regulatory agencies are trying to accommodate blockchain projects. I think this is going to be a very exciting year for us.
Yeah, no, that's awesome, and I want to kind of talk about all of that. But you bring up that there are a lot of good teams, a lot of good projects out there, and right now I think, and maybe it's because of like the little crash in the market that we're experiencing, that there's a lot more FUD going on, and there's a lot more, I think, fear that people have that none of this is real, or that things are just going to fold. Maybe especially in the Ethereum space. So what do you have to say about that?
I think uncertainty is really the value proposition of markets, and the price reflects uncertainty. When there is concern and there is lack of information, there's unregulated space, there's a lot of FUD, the price reacts maybe a little more than it should. Same when it goes up, same when it goes down. I think it's a little more, the range is more than you would expect in the traditional market, but this is where the opportunity is. And the fact that if you look at the history of crypto prices, eventually we have seen worse, and eventually things get better. That's
my take. I'm not scared. Then again, I've only been, I wasn't around during the Mt. Gox and that crisis. So I came in maybe late 2014.
Right.
And I'm assuming you probably have more experience.
Yeah, I've been trading since when I was a student, and I have traded every single thing out there: stocks, options, futures, penny stocks, and I've been through the whole motions, the whole emotional journey.
Right.
It is very scary when you see your first bear market.
Yeah.
And you lose either your paper gains. You thought you had $1 million, and now it's 5,000. Or things, you just came in late and you are now facing serious losses. But trading is a skill that you pick up over time, and it's like bicycling. Without training wheels, you fall a few times, you have to get up and you have to continue to do it. Or if you get scared, you'll never learn how to bicycle, right?
That's true.
So trading is a skill that takes about 10,000 hours to get to some level of mastery. And the only way to get there is to go through it. There's just no shortcuts.
People like to ask me, how do you trade? How do you trade? And I don't know what to tell them. It's really, I don't know. I've been doing it for years, and it was not always fun, and it was just a complete wreck a lot of the time. If I look like a genius right now, I didn't, and so I kind of had to explain to people that, there are some resources, there are some things I can try to give you to, read about this, watch this video. There's only so much of that you can take in before you actually have to do it.
Right. So 3 years is actually very good. If you are making profits in year 3, I would consider that almost exceptional, because most people
almost exceptional
take 4 years to just break even. And the reason is, when you start trading, your mind is driven by greed and fear.
Right.
Right. And when you act, the time you first jump in, the market has already gone up enough that you are essentially motivated by greed, and you jump in, the market will start retracting, and you are not expecting that. You are expecting it to go up. You are now in a very uncomfortable place, and you want to stop that discomfort, so you exit at a loss.
Right.
And when the market goes in your favor, a lot of people are not able to take a profit. They they want to prolong the feeling of winning, because they've not won in their lives for a long time. So they want to prolong it as long as they can, and then instead of selling when they're in profit, they wait until they feel bad, when the market goes against them. And
well, then that's a really critical skill, I think, and I've heard you say this before, that more so than your entry, your exit strategy is most crucial.
That's correct. So everyone knows how to enter, no one knows how to exit.
Right.
And people will say, I have this pattern, I have this indicator, this says it's a buy, this says it's a short.
Right.
But once they enter, as I said, they have no criteria to exit, right? So any criteria actually helps you bank your profits, right? And good risk management is key to being successful in trading.
Absolutely.
And a lot of that is having stop losses, having take profit targets, so that when you are in profit, you should always bank profit. Most people lose, not because their entry is bad, but the entry played itself out. It went up and then it came back down.
Right.
And it's too late. So in a bull market, when things are moving up all the time continuously, you could pretty much do anything, and you would be a winner, and you would think you're a genius. I don't know a single person who started trading in a bull market who doesn't think they're a genius.
Right.
And the first bear market is very, very humbling, and you are shocked, you are hurt, but for the first time you've seen reality.
Right.
And you realize that how little you know. And that is that is your transition to be a real trader. And if you have hunger, if you have passion, and if you have determination, you will educate yourself and be a good trader. A lot of people just give up because they feel it's emotionally too disturbing for them.
Right.
And
Right. And it is. I mean.
Yeah.
Absolutely.
You must have gone through. Describe your first trading journey.
Oh man. Okay, so I started trading Bitcoin futures off the bat. I never traded anything in my life. Just jumped right into it was on OKCoin. Before they cut US, before OKX, it was just OKCoin quarterlies. And I didn't know anything about it. I knew that I had some Bitcoin. I knew how to put Bitcoin in my account. I knew how to transfer it from spot to futures. I thought that you just you throw everything that you have into a position immediately, and then it was frustrating. It was okay, so I did it, and why is it that every single time it goes against me?
Yes, the market wants to go against you. It's almost amazing that of the first 10 trades, every single one goes against you, and you're like, I should be doing the opposite. I should be doing the Costanza thing, I should. And the reason for that is your perception of where the market is going is lagging. You think it's going up because your mind has detected that it's already gone up. You have to perceive the movement of the market a bit early so you can get back in time.
Right.
So I went through the same thing. I was trading, in those days, tech stocks, and I would see the market go against me every time. So I thought, what I should do is, when I think I want to buy, I should short sell. But that actually didn't work either, because what I realized was that I had to read the pattern earlier. So I started looking at, I've done everything, indicators, you name it, volume profile.
Right.
And all of them work if you know how you're trading.
Right.
And none of them work if you don't know how to trade. So eventually what I did was I dropped all indicators and started looking at demand and supply. And you can see that in candlestick charts very well. For example, you have overlapping red and green bars. That is a range, and you should not trade in that price level. You have to buy below or sell above. So especially the larger the range, the more important it is you do that. So once I started being able to see demand and supply, and eventually it's like seeing the thing in the matrix, right? You just start seeing what's
Right.
going to happen. It takes time, it takes practice, and a lot of times, even though you can read something, you cannot act, and this is the most interesting thing. You see people in all these channels, in the trader groups, they can tell you exactly what the market will happen, but they themselves,
Right.
when they start trading, they're going to go wrong. And this is one of the amazing things about trading, is that it's easy to talk, it's hard to do.
Yeah, no, that's true. So, okay, when you're talking about your trading candlesticks, what time frame are you using? You're saying like you've got red and green overlapping. What time frame are you looking at?
Right. So, when I was trading intraday on the stock market and in the futures market, I was using 5 minutes because I needed enough bars early in the day when the market opens, because that's when the big moves are.
Right.
So, I had to use 5-minute charts. But with the 24/7 markets, the hourly is probably the smallest you have to go for. And unless you are a person who is trading full time,
Right.
you should probably look at the daily charts, because it's a great thing about the crypto markets is 24/7. The larger the time frame, you get fewer but higher quality signals. And as I tell a lot of traders, it's not about the price, it's about probability. You should not say, oh my God, it was a 6,000, I missed it. 6,000 with a 50% chance of going up is a lot worse than 8,000 with the 80% chance of going up. So, it is, all that matters is when you get in, when you got out, and what is the, what portion of that you can take home and with what probability. So, trading fewer higher quality setups is something I think all new traders should try to go towards.
Right.
Yeah.
I didn't understand like the concept of being able to like, scale into a position or, start with this number of contracts and, have limits, stuff like that. It's funny that they would go against me, and they would go against me so quickly because that was probably early 2015. By the end of 2000, maybe not the end of 2015, the summer, then I started to figure some things out, but I was on the 1 minute. I was on the 1 minute candles. I didn't understand why I would need to be on any other time frame. I think that we're so lucky as traders to have the market volatility that we have today. And there are some times where I'm like, I'm trading and something's ranging a couple $100, and I'm like, oh my God, like, I need some movement, I need some action. When in reality, thinking back to it, it's like in August or September of 2015, I would be, staring at a chart on OKCoin on the 1 minute, and it's got 2 hours worth of candles, and they've marked the top price and the bottom price, and it's literally like the price has moved within 60 cents in 2 hours.
A lot of traders lose money because they overtrade. When I started trading on the 5 minute, I started trading ES, the S&P 500 futures.
Yeah.
And some months the entire day's range is like 5 points, and
Right.
What you do is you enter, and then it stalls, and then you reverse, and then that stalls, and you just keep doing that. And I ended up having 20 to 30 trades a day, and all that did was make my broker rich, right?
Right.
And yeah, so even when I first started trading futures, the first day I made $500. I was very happy because that was that is good enough to live live on trading. But what I discovered later was $420 was the commission I needed to pay out of that, right? So you really want to maximize how much you get from a trade, and it's about the range from a setup and the probability. So when people see buy, they see a signal. Unless you can predict that this is a signal that moves a big distance, that signal has actually very little value.
Right.
Right. So if you can sort that out and filter and take only the signals that are likely to move a large distance in a short time, and have a small probability of adverse pullback, your trading will always be bad. And the reason is, no matter what you say, when the trade moves against you, there is an emotional pressure, and people panic, and it is it is really unconscious. It is you really feel threatened, and you will get out or you will do something stupid. So, you need to get into trades, at least the early traders need to get into trades that are unlikely to move against you by a large amount.
Right. So would you recommend futures trading to a new trader?
No, I think.
No, don't do it.
Right. So, I think leverage trading is very, very different and very difficult compared to say trading in the spot markets, trading without leverage. When you have leverage, it is not enough to be right. You have to be right about the timing, you have to be right about the amount of pullback you are willing to allow. And most people who come from who traded traditional markets without leverage, when they start trading futures, they will just destroy themselves. And you could like you, for example, there are people who have started with futures,
right?
And I think the clean slate gives them an advantage. Whereas if you are used to buying on spot, you buy something, it moves against you, you say, what, I'm going to sit on this, I'm going to sit on this
right.
for 6 months. You cannot do that with futures, because if you are at 10x leverage, it only has to drop 10% to blow your position out, right? And if you don't have a way to estimate how much you need to put into a position, what will happen is your entire account can get blown up and you could lose everything.
Right.
So, these skills and this kind of getting used to this kind of danger, it takes some time. And what I recommend is go to some of the exchanges that have trading on testnet,
right,
and get used to it there, make all your mistakes, blow your accounts, test coins, and once you can make sort of consistent profits, then you trade with real money.
Yeah, that's so have you ever blown up an account?
Oh yeah, many times, and I think everyone does.
Right.
And it's like a rite of passage. It's all great traders have blown accounts. I had the foresight to put only a small amount of money, because when your behavior is off, when you're on an off day, when you're on tilt, so to speak,
yeah,
you really don't see what you're doing,
right,
and you think, oh, this is it, and you enter and you lose, and it happens all the time. And I've been in situations where I've made a good profit for over a few months and lost it all in like a week.
Right. Yeah. It only takes a few days.
Yeah, and that happens. So the one thing you need to do is you need to make sure that your account is not overfunded. Like you take your profits out all the time.
Yeah.
In case something bad happens, you at least mitigate some of those losses.
Right. Yeah. So always bank some profits, cold storage, whatever. Bank it. Don't touch it again. You got to have some. It's like insurance, or something like that.
No, I think it's what I call it is I call it money management and risk management.
Oh,
so
yeah, absolutely.
you need to know. You have to have maximum you're going to lose from the maximum gains you had. So if your account has grown, from that point onwards, you need a loss limit every trade and every day.
Right.
Right. And only when you can maintain that, your equity curve doesn't have the sharp drawdowns. In an individual trade, you need risk management to say, after this point, if it moves against me, I am wrong, and I'm going to exit, and I'm going to stay away until price moves away from this area. So the reason I say that is, if you go long, you lose, you go short, you lose, you go long, you lose again.
Right.
And what this is telling you is that you are not able to read the market in this situation, in this range. Wait for the price to move way down or way above it before you look for a new trade.
Right.
And that also probably sets up a trend when it moves that way. And with trend trading is always easier than futzing around in shops.
So your experience, my experience, but let's cut to the chase. What's really important here right now is what's going on right now in this market. Do you consider this a bear market, first of all?
Well, officially, if it's 30% down from the peak, it is a bear market, and we've been down 60%. Now, in crypto, everything is extreme, and
Right.
for all you know, this will just go back to where it was and exceed that all-time high. Highly unpredictable. So yeah, I would call it a bear market right now, and I'm going to see how it's going to react over the next few weeks.
Yeah, yeah. I was very hesitant to want to call it a bear market from the initial drop, even when we hit our current bottom. I didn't want to think it was a bear market, but after we've been ranging, I'm starting to think, you know what, maybe it is a little bit, but I don't know. What do you think? Do you think that it's going to take us like 6 months to just do this thing and then get out of it, or do you think that we can get out faster?
My concern was the rapid rise from I think something like 6,000 to almost 20,000
Right.
in 2 months, and that is
Yeah.
usually something unsustainable. And the faster it rises, the longer the recovery takes.
Okay.
So yeah, it could be 6 months, it could be longer. You never know, and a lot depends, I think, on new markets moving in. Maybe India picks up, maybe
Right.
China picks up even more. Those things may take unpredictable amount of time to occur. I think that overall the market is still strong. I think it's just a reaction to the extreme rise that we've seen over
Yeah.
November and December.
And that's definitely what the environment was like when I came in. It wasn't about the value, because apparently the value had dropped exponentially, right before I got in. It was about why Bitcoin.
Yeah, all the people who bought 2012, 2013, they saw price go up to 1,000 and go back down to 273, something like this. It did not bother them at all, because while the dollar value is useful and interesting, they realized that this is something they never want to sell. This is something that has its own value. You can build things on top of it. It's just so I think there are many people with a lot of Bitcoins back from the old days that will never sell no matter what.
Yeah, I believe that.
And therefore, yeah, things will. And same with Ethereum. Ethereum also has a lot of people from the old days who have tons and tons of ethers who will never sell.
People that bought into the Ethereum ICO.
Right. And compare that to newer coins like Ripple and something else. You don't know if there is that kind of dedication. You know what I'm saying? So, for example, is there a fixed supply? Is there no one knows. So, the dedication for the OG coins, I think, you won't see for the new coins, unless there's another breakthrough. Like there's a new coin that has a dramatic new value and capability not seen before. You may see that kind of loyalty in the future.
I want to move on to the space, but I want to let some people know, if you got started trading during the bull market, during the huge rush up, and you were making tons of money, and you're like, what's going on right now? Just hold on, just wait, hold it out. There will be another rush up, and if that's where you excel at making money, just wait for that to come back, do it again. You'll be great. I don't think that there's any reason to worry. We'll be back there. So I wanted to, you mentioned OG coins. What do we got? We've got Bitcoin, Ethereum, Litecoin,
Yes.
Dash.
Right. So I would say Bitcoin, Ethereum are the OG coins. When I say, whenever a new coin comes into the market, it has to have a clear value proposition that is not already present, and a big advantage. So Bitcoin was sound money, Ethereum was world computer, Dash was instant transactions, something like that. And if you look at the value proposition of sound money, world computer versus instant transaction, it's probably there's a differential there. The more the coin space fills up, the less distinction and new value they can bring in. So more things are already thought of, and the projects are already out there. Some coins are still being worked on, like the Mimble coin when it comes. Yeah.
or grin. I
Right,
think that,
right.
yeah.
But I think any space can get diluted when there's a bunch of people trying the same thing, just changing like a name here, changing like the address format here.
Right.
All of those are not going to have that much of an impact on the market.
So the bubble in all of those coins that may or may not have that great a value proposition, but a few months ago they were just like soaring.
That's one of the signs of frothy bull market. Almost anything goes up, and when you see people doing that itself as their their strategy to make money,
Right.
oh, I'm going to take this coin, I'm going to change some parameters and call it my own coin, and suddenly now it has a market cap of a few hundred million. That this is one of the signs the market is getting frothy and weak. The coins that really have compelling value that you can describe in a sentence or two, those will outlast this kind of bear market. The bear markets are actually healthy because they will kill all the fluff and they will focus, they will drive more value to the things with good fundamentals. And I think there's still a lot of value, there's still a lot of things we haven't thought of in terms of what crypto can do. In the initial, you will see something that is as new as Ethereum was to Bitcoin in the future. But most of the coins, I think most of the coins are just going to be mediocre and not going to go anywhere. That's just the nature of economics. You
Right.
won't be able to have both differentiation and volume.
Okay, so real quick, what is Bitcoin Cash?
Bitcoin Cash is another kind of Bitcoin. It's a fork, if you will, and
What's its value proposition? What was the purpose? What does it have that Bitcoin doesn't?
well, I wouldn't be the best person to answer that. It would be the people who promote that coin. But
That's why I'm asking you,
my
because
understanding
you're not
is-
promoting it.
Yeah, people who are doing it, they have a purpose,
Okay,
and the market is using those coins.
right.
So as long as there's a need and a use, the rest of the ecosystem that's not using it doesn't matter. For example, there's a token called useless Ethereum token.
Yeah, yeah.
Now it's still trading at a non-zero price, so it does have utility to the
Right.
people who are using it.
Okay.
Right. So this is how markets work. As long as there's a set of people using it and trading it, it has value. So you have to separate the judgment
Right.
from the market. So the market, once the market takes hold, it takes on its own life.
If a coin or an asset or whatever is tradable and you can make money off of it, that in and of itself is a value proposition.
It's not just about money. It's about if people are using it for whatever, whether it's to trade, whether it's to pay, whether it's just to they're playing a game, just like CryptoKitties, for example. I wouldn't know why someone would pay $100K for a CryptoKitty, but that is the market. People do things and only they know their intentions, and if enough people are doing it, that thing has value.
Can I tell you a secret?
Sure.
I might have bought a few CryptoKitties.
I knew it. I knew you're the kind of person who would do it.
It was the greatest troll, and it was like, why? And I had to do it, and I bred them, and it was so stupid, and they're all ugly. And I lost them all now because I destroyed my laptop, and I
that's bad.
lost
Yeah.
my
Yeah. So again, CryptoKitties
Yeah.
is an example of CryptoKitties, Pokemon cards,
yeah.
and this is, by the way, what they used to call Bitcoin. They used to say, this is just like Pokemon cards. This is just a bunch of guys who are changing numbers on their computers and calling it a coin. It's just not real. So it's the same thing with CryptoKitties or anything else. If there's a market for it, it has value.
I don't know that there is so much anymore. I haven't really kept up with it, but
It will go out of fashion like anything else, or something else will replace it.
it's like I think it's like a new kitty comes out every 15 minutes until like November 2018 or something. And that's a lot of kitties. That's like a very saturated market. to begin with. So
with something, I don't know what you can do with it. You cannot pet it, you cannot feed it, it doesn't catch mice, you know.
I did have fun, you know. I knew that I was throwing that money away.
It's entertainment value, so yeah.
Yeah, sorry to anyone, you know, I participated in that clogging of the, not heavily though, you know, it was like a couple kitties, whatever.
Right.
Anyway, but that's another thing. That's huge.
This kind of usage can clog the network.
Yeah.
And it will impact other participants. So, for example, Leverj is an exchange that requires Ethereum to function at a certain amount of bandwidth.
Mm-hmm.
Now, we have designed it assuming that it's always going to be clogged. So,
Right.
It will impact us less severely than some of these other exchanges that assume that everything is going to be okay in the network. They can just, you know, match a trade here, they can settle it. I think they will have a much harder time if a few of these games start taking off. And this again comes back to scaling. We need to figure something else out other than just, you know, raising the block size or increasing the gas limit or something like this. So, Ethereum is actually working on 3 initiatives. One is proof of stake, the other is plasma and sharding. So, and all 3 may make, you know, in a couple of years it could be really dramatic. You could have millions of transactions and, you know, it would still be very smooth. When that happens, I think it's a game changer. You wouldn't need the traditional markets anymore because crypto is cheaper, it's faster, it's more secure, it's decentralized, and most regulations, the purpose of most regulations would be automatically part of the system,
Mm-hmm.
right? You wouldn't need all that paperwork and, you know, all those liabilities that come with it.
Right. So there are a lot of people that actually recently we've had a lot of people in the channel talking about Ethereum being a scam, and they've been talking and for a while there's been a lot of talk about scalability of Ethereum, or the idea that, you know, it will hit a point where it will just be like a failure or a critical failure because of scalability or something. And I don't quite understand it, but so what do you have to say about that?
People do their analysis. Some
Right.
of this is based on sound knowledge.
Mm-hmm.
A lot of this is extrapolation into the unknown.
Mm-hmm.
And I feel that there is not enough knowledge to have an accurate prediction of where things are going to be.
Mm-hmm.
You know, many smart people are working on solving this problem. And I think that if you look at the history of crypto, we have seen so many problems.
Right.
And we have solved every single one of them. Many of these were considered impossible.
Right.
And we saw crypto itself, the whole Bitcoin blockchain itself was considered an impossible
Yeah.
problem. It's the, you know, the two generals problem. It's been solved. Multi-signature has been solved. You know, there is progress being made on proof of stake and sharding. So, I am very hopeful. I think human ingenuity is such that there is no such thing as unsolvable.
Mm-hmm. There are many different, I think, lines that lead to the death of Ethereum, if people want to believe that. Do you think all of them are being covered with these protocols that are?
Yeah, I don't think it's something you can predict. You can say this is going to die or not. I think that ultimately the value of any network is the people in it.
Right.
And if you look at Ethereum, it's highly organized, it's very disciplined. They plan what is needed for the ecosystem and they start creating it. So, if you look at the developer tools, libraries, the infrastructure, the whole event system, all of these tell me that Ethereum is going to be a winner at least for the next 2 years.
Right.
Now, technology may change, there may be a breakthrough that makes something else a preferred solution in 2 years. I have no way to predict that. But as far as the people are concerned, the best people, the brightest brains are on Ethereum, and I am not at all concerned about its future.
So we're comfortable then. We're comfortable with Ethereum, working with Ethereum,
yes,
working on the blockchain.
Yeah, and if some amazing thing comes, you know, tomorrow, it gains critical mass and traction. You know, we are not going to say we are going to stick with Ethereum. Let's say tomorrow there's a new technology that's much better suited and much better scaling.
Right.
Of course, we'll adapt to that. Just like
Right.
we came from Bitcoin to Ethereum, we'll move from Ethereum to something else.
Yeah, efficiency.
Efficiency, security, you know, everything that you need in a blockchain, right? It's
Right.
cost.
Right. Yeah. We've covered trading, we've covered the space. You know, we've covered other projects, other forks, crypto kitties.
Yes.
I have really enjoyed talking with you, so thank
Same
you.
here.
Thank you for this time. I hope that the community enjoys it as well. So comment, like, subscribe, leverage for life. We'll see you next time.